Pete here with the Small Business Resource Center and the Small Business Resource Center YouTube channel. This is kind of important information, maybe it's just speculation, but I'm going to go over, will the market crash in 2021 or will it continue to grow? Somebody once told me a long time ago, actually when the market crashed before, that doesn't matter. And I said, well, why not? They said, well, I don't have any money in stocks and I don't plan on buying a house. So, well, I guess if that's the case, if you want to live your life with blinders, it won't affect you that much if you don't have any money in the stock market and of course, you don't plan on investing. Or if you don't plan on buying or selling a house, it would not affect anything. But there's a lot of things out of the economy that it does affect everything around you, like fuel prices going up. Basically everything tends to go up, and it's kind of bad because your income doesn't. But let's look at this. One economist said the stock market could crash, and the only reason why it's where it is right now is because of dumb money. And I agree with that statement. I said that a long time ago. Well, if you saw my channel, when the market started to dip, I know some people were talking about, hey, is now a good time to invest? And I said, hell no. Not really, but the thing I did not consider is dumb money. And the main reason it was not a good time to invest based on relative facts is a simple fact that the market just started crashing. And they were speculating closures for the coronavirus for probably 2, 3, 4 more months. That being the case, the businesses had only one direction to go, down. But it seemed like there's so many new investors and people in the stock market that turned a lot of these stocks around. One example that I want to go over again is Hertz. Hertz announced that they were declaring bankruptcy, and then right after that their stock market went through the roof. Typically, if a stock is declaring bankruptcy, most of the people who are intelligent, educated investors are not putting their money in unless they know there's a plan for recovery in the very near future, which they didn't totally have. So who knows exactly what's going to happen, but that's one of the reasons why the stock market typically is said that it didn't crash completely and is turned around. And a lot of people are still saying that's why. The other thing, as far as the economic, is policy. Trump's policies brought a lot of jobs and a lot back to America right after his election, and he has been doing this the whole time, which a lot of people don't know, is changing trade policies and making it better for Americans to be employed and be competitive in the global market. Biden's policies seem to favor a lot of foreign countries, and even though a lot of Trump's policies probably won't get changed overnight, it has shown in the market because right after the election, a lot of large manufacturers, even in my area, had actually laid people off because of slowdowns already. And governments enacting policies that are in the strong democratic areas like ours, who are forcing lockdowns, not just social distancing and reducing incomes, but forcing business closures while you allow big businesses to open, have caused a big ripple effect in the economy that's not going to change overnight. But I'll go into more things like that. Give me 1 second here. With the lack of stimulus and increase of business, personal debt, and government debt, these are large factors that can cause an economic crash. So the stimulus money has helped to prevent the crash, but first of all, it's not enough because it's not enough for small businesses. I mean, if 600 bucks saved your life, I mean, I'm not saying it's nothing, but really it's not enough. And when most people lost a lot more and have lived off of help of friends or family, there's a lot of things like the stimulus packages, rent moratoriums to prevent people from being evicted, as well as the forbearance programs. So those things are helping and preventing the market from crashing. When you're looking at Bitcoin, cryptos, precious metals, they tend to move opposite of the economy. There's a couple times when they did not do that, but in general, if the economy is doing bad, they will go up. When the economy is doing good, they tend to go down. The reason is because people want their money in safe assets, or they feel are safe, and those commodities, even scrap metal, tends to go up. When the market crashed, I knew some people who were unemployed or people who quit their jobs because scrap prices went so high. They said they were making more money collecting scrap metal and taking it to junkyards versus working at a regular job. So I don't know what you do. For me, that would be tough, but I mean, for a lot of people, it actually provided a good source of income. And right now, we're looking at approximately 12 million Americans that their unemployment benefits had stopped. The pandemic unemployment benefits, a $600 kicker, that ended a long time ago. Because of the fact that the stimulus is not passed right now, I won't go into all those details because YouTube's going to demonetize my video and show it to less people. But the lack of stimulus is a big problem, and that, if it doesn't get corrected very quick, is going to start having a huge ripple effect, and it may cause a market crash. Huge market sectors are not going to recover for 1, maybe even 2 years. And the main reason is because people are instantly not going to come back even if they have stimulus. What's being favored are big businesses, and the mom and pops and the small businesses are not being favored. So travel, entertainment, restaurants, and American small business owners, they're the ones who are going to take 1 or 2 years to fully recover. And many people, they have estimated 15 to 20% of small businesses in the United States are going to have a closure or already closed. And those people who are going through legal issues right now, also bankruptcies, all that stuff is happening, and that ripple effect is going to be a 1 to 2 year period. There's also an estimated about 80%. I was told by somebody who lived in New York, of office buildings in New York are empty because so many people are working from home. That's going to create a ripple effect in commercial real estate. If many companies are saying, well, we don't need these big office buildings anymore, you know, they're going to try to reduce their lease or sell their property and then just have people work from home. Why would you have a big business full of people if they could be equally or more productive at home? So household and the buying cycle, that's the next thing. The household and buying cycle tends to go by generation. In Japan, it's a 47-year period where the buying cycle tends to go up. In America and Europe, it's a 46-year period. That period actually ended in 2007, was the peak of the period. And basically the stock market started going down, and a lot of people said that quantitative easing is what fixed this. So the buying cycle for the millennials starts in 2023. And that's because the younger generation, they're going to start spending. They're going to start increasing their spending once they have kids. You know, they want fancy cars. They want the big house. And that's going to start a buying cycle. What's really funny about that, when I tell you, maybe I shouldn't say funny, coincidental, is now the counterpoints of not having a market crash. Counterpoint number 1, the Federal Reserve stated they will not be raising interest rates to 2023. I would have to say that's due to the current economic conditions. Maybe it's the fact that they know about the buying cycles and they're trying to keep the interest rates low to keep the market, I don't want to say propped, but moving forward to help prevent a crash. After 2023, they'll decide if they want to raise interest rates or keep them the same. But that's a good thing, if you ask me. And also the lack of stimulus, that if they do pass the stimulus and pass good stimulus, that can actually keep the market from crashing. The main reason it will keep the market from crashing is if you're providing money to the people, the business owners, if you provide incentives or financial help for people whose businesses got shut down, obviously that would prevent a market crash. So when if it passes in January 2021, it could prevent a market crash. If it does not pass, we're going to have a ripple effect that's going to last many years, and The question is, will we have a flash crash that happened before? Well, I shouldn't use the word flash crash because it was gradual, even though a flash crash is possible. Or will we have a dip in the market again and another recovery? You can't shut businesses down, small businesses, take away people's jobs, and think nothing's going to happen. That would be completely foolish. But it is actually not the entire United States. It's actually just big pockets, mostly that are Democrat-run areas, that are shutting down the market. But that does have a market effect on everybody because it just does, you know. So let's see what happens. These are the points and counterpoints for a market crash. I don't like to use the word correction because it's not a correction when you're stealing someone's money or the market's crashing. Or you're giving money to foreign companies, but you don't want to give money to Americans to help them. That's insane. Well, it's Pete from the Small Business Resource Center. I don't know if this was more of a rant or educational, but smash the like button, subscribe if you're new, comment below. I'd like to hear your thoughts. Have a great day.